Welcome to Wealth Creation Series, where we learn and grow together with one goal, the goal of creating wealth. If you like this video, please hit like and subscribe to this channel. Welcome back, everyone. As always, in the first part of the episode, we'll talk about the news and then we'll talk about why new investors are losing money in the stock market. So stick around. In this episode, we have news about Microsoft buying TikTok, the reasons behind it, and the reaction from China. So hope you enjoyed this video, and if you please do hit the like button because that definitely helps out the channel. Microsoft on Sunday confirmed that it has held talks with the Chinese technology company ByteDance to acquire its social app TikTok in US. Microsoft said in a statement that it will keep working with US government on a deal and that it intends to conclude the talks by September 15th. If it were to complete the deal, Microsoft could simultaneously resolve a recent controversy in Washington and gain power in the consumer technology. TikTok, a mega popular viral video app with 80 million daily active users in the US, it got into scrutiny over privacy concerns and was accused of sending user data to servers on China. If you have watched previous episodes, you will have known that there was a lot of talk about TikTok that it was going to be banned from the US. For more information on what happened at that time, I request you to go back and watch the older video. I'll put that link in the description. Now we have Microsoft in the race to buy TikTok, or at least its US business arm. So now let's see how Microsoft can easily buy TikTok if they wanted to. Microsoft's earnings came in on July 22nd. The company posted a revenue of 38 billion versus 35.5 billion despite the lockdown. Its overall revenue grew 13% on annualized basis. They have a very good balance sheet. As you can see here, they have more than $136 billion lying around in their cash and investments. Their long-term debt is 59 billion. So the cash-rich position easily allows them to pay off their long-term debts and still have over 77 billion left in their account. The whole of TikTok company is valued at around 55 billion, so Microsoft can easily buy it off and still have a few billion in cash. Let's say they only buy the TikTok's American arm for 5 billion. If that's the case, Microsoft can easily do that. It will be a drop in the bucket for it. So now let's look at Microsoft's history of buying up companies. Microsoft acquired LinkedIn in 2006 for 26.2 billion and GitHub for 7.5 billion in 2018. LinkedIn had over 400 million registered users, making it the largest social networking site focused on the working world. People use the service both to make work connections with other people in their field but also to look for jobs and hire people. GitHub is a company that provides hosting for software development and version controls using Git. The news of Microsoft trying to acquire TikTok made the stock go up more than 5% on Monday. The gains added 77 billion to Microsoft's market capitalization at intraday highs, bringing its total value to more than $1.6 trillion. There are also rumors going around that Apple might be interested in buying TikTok. In the meantime, President Trump says that TikTok will be out of business in the US if a deal around the sale of its American operations isn't completed by September 15th. Trump says he doesn't mind whether it's Microsoft that ends up buying TikTok or a big security company, so long as the company isn't controlled by China. To which the Chinese state media labeled the US as a rogue country and dubbed the potential sale of social media from TikTok to Microsoft as theft, adding that Beijing would retaliate if a deal is sealed. State-backed China Daily said Beijing has plenty of ways to respond if the administration carries out its planned smash and grab of TikTok. Remember, this is one of the few times that US has blocked any company from China. China routinely blocks all US websites and services from giving access to their market. Wikipedia shows a list of websites blocked by China. If you look at the list, you will see websites like Google, YouTube, Facebook, Wikipedia, Microsoft, Netflix, Bing, Twitch, Twitter, and many other blocked from accessing the Chinese market. Hopefully, the drama around TikTok would result into the US website being able to access Chinese markets, but that I'm guessing is wishful thinking. Next we have is Kodak. The SEC is investing Kodak's recent 2000% spike following Elizabeth Warren's call for action. Kodak, the company that was big on photography in the early 1980s, share of Kodak company rose up yesterday. The Trump administration announced that it planned to give Kodak a 765 million loan for manufacturing ingredients used in the pharmaceuticals. In order to rebuild the national stockpile developed by COVID-19 pandemic and reduce the dependency on foreign factories. Within 2 days, the company's stock price had gained as much as over 2000% from its price at the close of July 27th on the New York Stock Exchange. It also gained as much as 26% the day before the information was about the loan was made to the public. Kodak began to struggle financially in the late 1900s. In January of 2012, Kodak filed for Chapter 11 bankruptcy protection. But by January 2013, the court approved financing for Kodak to emerge from bankruptcy by mid 2013. It did so by selling patents. In response to the COVID-19 pandemic in 2020, Kodak announced it would begin production of pharmaceutical materials. In a letter on Monday, Senator Elizabeth Warren urged the SEC to investigate individuals and corporate entities making large trades of Kodak stock before the announcement, as well as whether anyone inside Kodak shared information about the loan before it was made public. Now, for the second part of our video, we'll discuss why new investors lose money. I would say one of the top reasons, or the number one reasons for new investors to lose money, is because they day trade. Apps like Robinhood and others have made it so easy for people to day trade through options and calls and puts that they think it's easy money. During this pandemic time, when people especially have free time, they're getting hooked onto the stock market in the promise of making quick money. But the thing is that when you trade with options, it's a zero sum game. It's risky, it's stressful, and I think it's something you should avoid. Investing on basis of just pattern is not a smart strategy in my idea, because you're just investing based on the patterns, the charts, but not on the fundamental basis of the company and how it's going to do. Multiple studies have found that over 80% of people who day trade lose. And it's not only that, it's also time consuming. You would have seen many screenshots like these of day traders posting online about their losses. And the first rule of investing is that you should not lose money. So I would just advise the new investors to stay away from something which they don't understand. The second is, do not invest money you cannot lose. First, you should pay your debts, pay up your credit cards because they have high interest ratings. Then you should invest in your Roth IRA, your retirement accounts, and after that, save your money for a rainy day fund. Probably something of like an expense of like around 6 months you should keep aside. And then you should start investing or trading. Do not even think about investing before paying all your debts and saving money for emergencies. The next reason is margin trading. Margin trading is borrowing money at high interest rates and using that money to trade. That is something of which is a big no-no again in my books, and it should not be done. The next reason why new investors lose money is because they think that they can make quick money in the market. Even Warren Buffett has said that it is not the timing in the market, but it is the time in the market. There is no such thing as quick money. You cannot time the market. You should always invest in companies trading below their value with good fundamentals. In 2009, when the financial markets crashed, people who were trying to time the market and were waiting for it to go to its lowest point missed out on a lot of deals at that time. Now, the fifth reason why new investors lose money is because they let their emotions get the better of them. Emotions such as hope, greed, fear, or loss drive them, and then when the market goes down, they get into fear and sell and panic and try to get out of the scripts they have. Also, when the market is going up, they get greedy and want to buy more stocks at the time when everybody is buying and it's going up. So you should not let your feelings get the most of you. If you are that kind of a person, then a good idea would be to do dollar cost averaging. That would mean you invest periodically sums and make it automated every few, so that a certain number of amount gets deducted from your account every month, and it's just an automated process that eliminates all the emotions out of it. The number sixth on the list is only buy stocks which you know. You should only buy stocks in companies which you know what their business is, you know what their financial statements are, and you know the management team's experience and how good they are at taking the company in a good direction. So, all these things you have to do your research thoroughly before you buy your stock, and it should be a company which provides a service or a product which you really like and enjoy and preferably use. So, for example, when I buy stock of Apple, I know the company, I know how the products are. I have used it, I know that I like it, and I know that also know that there are many people who are die-hard Apple fans and they will buy whatever phone or iMacs Apple comes out with. So till the time they keep making good products, I will want to keep their stock in my stock account. Also, they are not just into hardware and software, but they are also into streaming services, and they have multiple sources of revenue. So I know that company, even if tomorrow when the shares of Apple go down, I will probably buy more and I would not sell and then hold on to them for a really long time. Now, mistake number seven. Mistake number seven is that new investors don't ignore the noise. When I say ignore the noise, it means all the noise which the media makes, the daily ups and downs of the stock market, the news, the instant breaking news, all of those need to be avoided. You need to be focused on the long term and see that there's no fundamental shift in the company. Everything else is just noise which you should just filter out and focus on your strategy. Now, mistake number eight. On number eight, we have new investors investing in what's trending. They just hear on the news, the media, whatever is new, whatever is trending, and they put their money in it, just thinking that the trend is their friend and invest in it. Let's look at the Hertz stock. When the news came in for bankruptcy, everybody started buying over here in the from end of September, November, all the way till January. And then, if you had invested over here at this point at $20 or some change, you would have lost all the way down over here. 90% of your investment would have wiped out. Same goes for the other company known as Hero, which had an IPO of $40, near $40 it opened, went up all the way till 86, and then just went down all the way till $5 and has been there since the last 5 years. We can find many examples like these. And then the last on the list we have is selling when the price grows low. Many investors sell out as soon as the price starts falling off a stock. But on the flip side, you could think that it's also an opportunity to buy a stock. Market will keep going up and down, but if the like I am stressing again, that if the fundamentals have not changed, then you should not worry about your stock going down, and probably you could even add more. All right. So to summarize it all up, don't day trade, don't invest money you cannot lose, don't do margin trading, don't try to time the market, don't let the emotions guide your decisions. Only buy stocks which you know and understand. Ignore the noise which is coming from the media and other outlets. And don't invest what is trending. And sell when the prices go low. Alright, so this is it for this week. I hope you liked the episode of the Wealth Creation series. I will bring in more ideas for financial success next week. If you did like the video, learned something new, or just enjoyed listening, please give the channel a thumbs up by pressing the like and subscribe button. I make these videos for entertainment purposes only. I'm not a licensed advisor. Please do your own research before investing.